Okay, class, here we are. I'm gonna do prepare this statement of cash flow for you. I uploaded this problem into Laulima, so you should be able to see it there. It's called cash flow problem. It's a PDF. So with a problem like this, you're given a bunch of information. You're usually given a comparative balance sheet showing 2 years and an income statement and then some additional information. So you have to consider all these three things when you put the cash flow statement together. So your first step would be to compute the balance sheet changes. So what I've already done is I found the difference between 2011's balances and 2010's balances. And that gives me the increase or decrease in each of those accounts, right? So there in yellow is the change in cash. That will be our check figure, our what we're reconciling to, okay? And the first thing we will do is start with the operating section. So indirect method cash flow statement, you're going to start with operating activities. Okay, and inside of that section, we always start with net income. So we'll have net income. And where do I get the net income from? Well, we're going to probably find it there on the income statement. So over here on the income statement, you see 201,000 in net income. Okay. Then I'll have my adjustments to reconcile net income to cash flow from operating activities. That's a whole big mouthful of words. Make this a little wider. And we start listing them. And what we could do is we could categorize them. So we could do the adds, then the subtracts. So I'll put another column in here. Pull this back over. And we'll start with the adds. So what do we add back to net income to get to operating cash flow? Well, first we're going to add back depreciation expense. Okay. So you're going to have some depreciation expense, and since depreciation expense is an expense, you're going to find it over here on the income statement. So there's your depreciation expense, 54,000. Okay. Then we're gonna look at our other current assets aside from cash and our current liabilities. Okay, over here in orange, right? Now we know the rule is all increases in current assets are subtracted. Okay, and all decreases in current assets are added back. And it's the opposite for payables. So all increases in payables are added, and all decreases in payables are subtracted. So any current liability. Okay, so I'm going to take my income tax payable. So I have this increase in income tax payable. That's going to get added back. So that's 3,000. Then we're left with subtractions. So we have the increase in accounts receivable. We have an increase in inventory. And we have a decrease in accounts payable. So those three will be subtractions. So I'm looking at subtracting 12,000 right over here. I've already computed the changes. 75,000 and 27,000. So if I make a subtotal out of that, see what I can do. Subtotal those guys. That's a minus 57,000. And I subtract that subtotal from net income. That will give me, okay, and we're going to call this net cash provided by operating activities. Okay, another big mouthful of words. Okay. So you've figured out your operating cash flow.